You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central, 1 p.m. Eastern. It is time for episode dose here of the bi-weekly source of all things options. Yep, it's time for the Thursday edition of the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, on the ever-exciting, at least we hope so, Options Insider Radio Network. Remember, you like what you hear, this program, everything else we do, pretty much shows hitting you twice a day, just about every day here on the network. Keep those reviews coming in your platform of choice. It really helps new people. A lot of new one-lots hitting the options market these days. They need a place to turn. So help direct them. Head on over to your platform of choice. Keep those reviews coming. You guys have been very generous with those so far, so keep them coming. We appreciate it. And all the new listeners appreciate it as well. We love to see the new earlobes and the new listeners joining us day after day here. Of course, keep those questions coming too, particularly on a day like today. It's Thursday. It's Mail Block Thursday, so you guys get your chance in the hot seat a little bit later today. Remember, if you're listening live, if you have a question, you get bumped up to the top of the list, so aren't you folks lucky? If you got questions, hit us up there as well. Let's see who else we're hearing from today. First, let's go out. Usually this is the day of the week where we go out to the Giovinazzi Fortress, easy for me to say, on the shores of Maine. But he's a little under the weather these days, so sad to hear that. But we are joined once again, pivoting all the way deep in the heart of Texas, to the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball, how go things deep in the heart of Texas? Did you have barbecue last night, sir? Isn't that required by law in Texas?
You know, I had a burger, but it was an excellent burger. So, no, I'm happy to be here. I'm excited to be here. Yeah, Andrew is a little sick, so the audience gets a huge bonus of a double meatball.
Double dose of the greasiest.
2-for-1 meatballs.
2-for-1 meatballs. I heard a rumor IKEA may be getting out of the meatball business. We'll have to confirm that. We'll see later on in the show. Also joining us from a little bit closer to home, from a provincial hamlet known as St. Charles. We are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well.
Always happy to be here, especially on Double Meatball Thursday.
I can't get that image out of my brain. I'm scarred for life now as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading and what's lighting up our screens today. And kicking off the show here, a bit of a mixed Thursday here, a bit of a mixed end to your trading week. Seemed like things were looking stronger earlier, the looming prospect of approval of the vaccines. Canada just approving the vaccines of the latest Western nation to do so after England. Of course, all eyes here on the FDA in the U.S. So it seemed like things might be a little bit stronger coming into today. And then the market's kind of taking a little bit of a break here. Who can blame them? They are, of course, at or around all-time highs pretty much right now. So the Dow and S&P ever so slightly in the red, about 0.1% on the S&P and about 0.2% on the Dow. The NASDAQ, though, bucking the trend, up about 1/3% or so out there right now. So seeing a little bit of green on the old tech screen and a little bit of a mixed bag out there in the vol space as well, which is always kind of interesting to see out there. Coming into showtime, we got the old VIX cash actually ticking up a little bit. It was at about 22.25. Kicking off the show, puts it up about 0.75 point, ticking up to about 22.5 now, which pretty much puts it up right about a handle from last show. So people have been remarking for a while, we're at all-time highs. Usually that equates to pretty much all-time lows or close to it out there in the implied vol space, and yet not seeing that out there right now, which is kind of interesting. I know Brian on OPR recently did a long treatise on that, an interesting VIX backspread trade he was looking to do out there. So check out those recent episodes if you haven't done so. A lot of people just speculating about what is keeping up the front portion of the vol surface. So, of course, all this juicy vol of vol probably contributing to that as well. It's not quite as juicy as it was, but it's still a lot more frothy than it was, let's say, a week ago. It's at about 112.5 coming into showtime. Puts it up about 7.5 handles. So vol getting a little bit frothier, a little bit juicier out there. Our old friend VXX that everyone loves to fade, not so much with the fade right now. A little bit north of the 17 handle, puts it down pretty much unched from our last show, about 0.1 point or so. It's not a huge move out there. And our old friend Vol Q, a.k.a. the vol of the NASDAQ 100, ticking up again, up about 2 points. Remember, everyone always thinks downside is vol, but movement is movement at the end of the day, and movement is vol. And NASDAQ has been moving. It's been one of the few indices bucking the trend to the upside of late. So about 25.25 coming into showtime, puts it up about 2 points from where it was this time last show. So VIX up about a point, Vol Q up about 2 points. Interesting stuff afoot out there in the volatility space. Let's go back around the horn, the opposite of the way we came. Let's start in the land of St. Charles. Mr. Uncle Mike, sir, if you're hanging out in the NASDAQ, it's an Uncle Mike type of day. What's on your radar today in this somewhat mixed Thursday, sir?
Well, we have the S&P roughly flat right now, and in reality, for the last probably 2.5 weeks, the S&P's moved roughly 1% from where it was. We had all-time highs yesterday, just at the open when SPY went up to 371, and the S&P did go up above 3,700 for a brief amount of time. But right now, the 3,700 mark on the SPX seems to be a tough nut to crack, at least for the time being. I think right now everyone is kind of waiting on, like you said earlier, the FDA for where things are going right now. If we get the vaccine approved, but it is 2020. Everyone knows, or I'm willing to bet that most people believe that the vaccine is going to be approved. The news so I guess what I'm saying is that I don't know if that's going to be a major market mover, but I could be wrong. It is 2020. Right now, what's happening in the UK is they are seeing some results coming out to where people are getting allergic reactions. People who typically get allergic reactions to vaccines, they're recommending that they hold off on this one for the time being. So that's really the only negative news that's coming out so far with the vaccines. So it's going to be interesting to see if we do get a big move when the announcement's actually made, and if it's positive. If they say it's not approved, then I could see a lot of downside coming. But if it is approved, then I don't know if it's really going to be a major mover, because I think the market thinks it's going to be approved anyway. In terms of some sectors that I'm watching right now, energy continues to climb. XLE, the energy ETF, it's a 41.5 today, and it's really It's kind of like had a late burst in comparison to the market itself. It was as low as it was a lot lower back in the spring. Remember the negative oil day? That's going to be a fun one to talk about, or a fun thing to talk about on our end of year wrap up. But we actually had that, and so probably around that time, it was getting close to its lows, but it really has rebounded nicely. And I think a lot of the reason it's rebounded is that we have the hope that we're going to need energy again. If everyone's staying home, they don't need to put gas in their cars. But if people are out, then we will need gas. Now, granted, in America, I'm not convinced we're going to have the same oil demand as we once did, but I really have a hard time believing that in third world countries or places where there is a lot of demand for cars, that they're going to all go solar right away, or they're going to all of a sudden have lots of oil wells right away. So I think there's going to be more of a world demand for oil and natural gas, and so we'll see where that goes. But for the time being, the main thing that I am watching and seeing that I think really has a lot of factors on where the market can go at this point, it's actually energy.
Yeah, we had an interesting chat with Mr. Eric Norland. He's the head of all things research over there at CME. He was one of the researchers over there, one of the chief economists over there. Does great stuff across the broad spectrum of all the products that trade at CME. So energy, you're talking rates, you're talking equities, all that stuff, volatility, the options, the skew. We had a great chat with him, beamed him in from across the pond. You'll be getting that a rare dose of TWIFO immediately after the option block if you're listening live. So stay tuned for that, a rare treat. Don't have to wait a half an hour like usual. So that should be a fun one out there. But yeah, we talked a lot about energy and what's going on out there and how the demand will be certainly interesting to watch once all this virus news and all the virus starts really hitting the mainstream and things start happening again. Planes start flying, people start driving everywhere, and energy demand starts taking off. Should be interesting to watch. Also interesting to watch what's going on out there in the vol space. Let's go down now back to the heart of Texas, not only the land of barbecue, but the land of all things volatility. Mr. Meatball, kind of an interesting one. This is something people have been speculating about for a while. We've been talking about it here on this show and on Vol Views. We're at all-time highs. The indices are still staying firm from a vol perspective. What is lighting up your tape out there, sir?
Yeah, I think what we're holding back on is the stimulus talks. If we get that, $900+ billion stimulus bill, I think this market could go off like a rocket ship. I think that that's kind of what's being built under. Now, if stimulus talks fade, I think the S&P is going to go right back to 3,500 range. But I think we got potential to absolutely blow through 3,700. And that could be a real driver of the VIX lower. Right now, I'm looking at the way VIX positioning is set up. I know we'll talk about this on Vol Views tomorrow, but the amount of open interest for December in the 20s, the 21 puts, the 22 puts, and the 19 puts is absolutely astounding. There's like 1 million contracts outstanding across those four strikes, and it just dwarfs everything else. So if we start to see vol fall, as market makers are forced to hedge off those strikes, you could see an absolute collapse in both the VIX, the VXX, the UVXY, and that meaning the VIX futures as well. So I think that might be what is kind of the holdup here, and what's holding up VIX. Because I'll tell you, when stimulus talks looked like they were mostly a done deal before they kind of got a little more complicated middle of the day yesterday, along with kind of what turned out to be a bad bond auction. We were threatening a sub 20 VIX in the morning, and so I still think that's on the table. So that's what I'm looking at. I'm also looking at all my fun Robinhood stocks, and I got a new one that hit the tape yesterday that I'd never heard of, but that we'll talk about in a little bit. But just all kinds of funness out there in terms of the single name activity, some names we do know, and some names that are going to be new to the table that I'm going to have to talk about.
Well, we do like our weekly dose of funness here on the show. Let's talk about some of that activity. What's lighting it up right now? As of a few minutes ago, VIX actually doing some paper, closing in on 300,000 contracts, about 296,000 contracts on the tape. That ADB has come in quite a bit. Remember, we've talked about that for a while. It spiked over 600K, then it was 5 something for a while. Now it's back in the 4K range, 400K, I should say, really. 462 as of today. So that's come in quite a bit over the last couple of weeks. As VIX volume hasn't exactly been blowing the doors off of late. SPY, similar deal at about 2.25 million contracts right now. The ADB is shy of 4 now, 3.62 million. So SPY, ADB coming off as well. The S at 510,000 contracts. The ADB is pretty much exactly a million. So you got about half a day's worth of paper already up out there in the S. The Q, 752,000. The ADB, 841. So Qs are on fire. I think the notion that they're bucking the trend and continuing to rally in spite of everything else, driving some flow out there, because the Qs are putting up some numbers today. An IWM, 290,000 contracts, kind of light out there. Their ADV is about 620, so they're closing in on a half a day's worth of paper, but not exactly NASDAQ in terms of just devouring its ADV already. Mark mentioned the single names. Let's see what's lighting it up out there from a single name perspective. It's actually a pretty active day out there. It cost you 201,000 contracts to break into our top 10 most actives today. That gets you all the way to GE. GE making some news on the settlement front out there today. Gotta love these settlements. They admit no wrongdoing, but they pay all this money. You gotta love these SEC settlements. 201,000 though. That's what it's good for in terms of options contracts today. And it's good for the number 10 spot. Number 9, our old friend Telephone fighting back into the top 10, aka AT&T, for all of you who weren't on the SIBO back in the day with all the old timers. They used to call it Telephone. I never understood why. Telephone was somehow easier to say than AT&T, but c'est la vie. I digress. 223,000 contracts for the number 9 spot. Number 8, AMD, closing in just a tick under 250,000 contracts. Number 7, Facebook. Not much good news out there for Facebook today. Pretty much every U.S. attorney combining to go after Facebook today, saying maybe they're a bit of a monopoly. And yet that's only good for, less than 1% sell-off now out there in Facebook. It's off 2.5 handles. So the notion of breaking up pieces of Facebook, that's not enough to budge the stock much at all. So there we go. Facebook, though, it's good for about 250,000 contracts on the tape right now. Number 6, American Airlines, 269,000 contracts. Number 5, Pfizer. You don't need me to explain why Pfizer's in the top 10 right now. 278,000 contracts. Number 4, NIO. One of the more popular Tesla alternatives floating around out there. You guys certainly like it out there. You've been slinging it a lot. 312 is actually kind of light for them. They've been taking the top spot a few times out here of late. Today, a meager 312,000 contracts on the tape. Number 3, Palantir, still firmly rooted in our top 10. Last couple of weeks, Palantir's been there pretty much every time. 367,000 contracts. You know what the top 2 are, of course. It's just a question of order. And today it's flipped. Number 2 is actually Apple. 938,000 contracts. That means number 1 is Tesla. Tesla is the big dog today. 1.1 million. Let's look really quickly where the most biased flow is coming today. That would be in Pfizer. 86% of that paper coming on the call side. So 240,000 calls going up out there in Pfizer today. So apparently no one wants puts in Pfizer today. It's all calls all the time. That's followed by GE, 81% of the flow. And then AMD at number 8 there also has about 80% of the flow. So most of our names in the top 10 are typically call biased listeners and some pretty heavy ones out there today. Let's look really quickly and see what else is lighting it up out there today. If you guys like yourselves a little bit of earnings, and sometimes it's nice to take a break from the macro madness that is vaccines and trade wars and pandemics and everything else and just focus on something limited, like an earnings announcement. And if you like doing that, we still have some big names popping off this week here. Remember, you can get all these earnings move results, and earnings season reports. How much? It's free. Where do you get them? TheOptionsInsider.com. Courtesy of our friends over there at ORCL. Go to the website, click on that Options News and Articles tab on the top right corner, and you'll be off to the races with all the latest ORCL reports coming at you here. We've got some new ones hot off the presses here from this morning. So let's see what we got. So first off, there still are some names popping off this week. Tuesday we had Chewy and GameStop after the bell. We've got, yesterday we had Campbell Soups, Vera Bradley, for all you ladies out there who like your, shall we say, loud prints out there in your fashion, in your handbags and accessories and everything else. Today we have Costco, Adobe, Lululemon, kind of an infamous one out there, Broadcom, Oracle, and Dave & Buster's. They have to be struggling, given the fact that no one wants to go out and really spend time around people or touch things. So it's kind of a rough thing when Dave & Buster's, that's kind of their core, the business. We got already the move results reports coming in for a few of these. We've got Adobe here right now. They were popping off yesterday after the bell. They were at 483.74 coming into their announcement. They were pricing in almost 4.5%, so a pretty hefty move. What did they deliver? 0.5%. This is just a broken record time after time here, listeners. These names are just all underperforming their earnings straddle out there right now. So yeah, that's just one of many that are popping off out there. Let's see really quickly. This was Costco. They're after the bell today, so they obviously haven't reported yet. Let's look really quickly at what they're pricing in. They were at $3.7425 as of this report. They were pricing in $9.37. In the past, they moved $9.54. So Costco pretty much in line out there. I guess they've learned their lessons from previous cycles. Lululemon, let's see what's up out there. $3.63.5. They were pricing in $24.75. In the past, they moved $31.32. So a little light juice on Lululemon, which again, if past is prologue for this earnings season, that's probably the right move. Let's see, Oracle, $59.73. They're kind of sleepy. They're only pricing in about $2.65. In the past, they've moved $3.18. Not a heck of a lot to be found there. And Dave & Buster's, a.k.a. Play, they are at $25.63 going into this report. They were pricing in $2.64. In the past, they moved $1.96. So a little bit of extra juice in Dave & Buster's might be warranted given the fact that their entire industry is under siege right now. So you might expect a little more juice, but interesting stuff nonetheless. You guys can also check out the earnings season report for yourselves out there. If you did that, you'd look to see how things are lining up week by week in terms of what's going on out here week by week. If they're performing up to or below their straddles out there, 100% is obviously every bit of juice that's being priced in is being merited in terms of movement, and less than that is not so much. More than that, which is rare these days, is giving you more out there right now. So interesting stuff afoot out here. We'll have to bring Matt back on to break it all down for us in a little bit. But it seems like maybe, and this is kind of the pattern usually, after things have underperformed, they usually shrink those straddles to the point where maybe things start to even out a little bit. It seems like we might be hitting that point right now. The couple of weeks looks like here, week 3, week 4, and week 5, all exceeding their straddles, 104%, 112%, and 110%. So maybe we finally hit that tipping point, listeners, where people say enough's enough. We got to actually get some movement. And it seems like maybe, perhaps, we are at that point. But we're also at that point, listeners, where we get weird, we get wild. Yes, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, you know what time it is. It's time for the Odd Block. Time to unleash our eye of Sauron upon the options markets and see where it fixes its steely gaze first. Looks like it has rested its eye first upon ADT. You know them, they're the alarm makers and all that good stuff. Haven't talked about them in a little while. Their ticker symbol, of course, ADT, trading right now $8.72. So this one might be one of your Robinhood names or Little John names, Mr. Meatball, because it's certainly in that price category that those one-lot traders tend to like. Let's look back here, see what's been up in ADT over the course of the year. I mean, it's an interesting year. Obviously, people are spending more time at home, so you might see a little bit more demand for home security services. A year ago, 9.25. That's where it was trading. It's $8.72 right now, listeners, by the way. Then it sold off to about $3.40 in the great nadir that was March. Then it kind of turned around pretty quickly. And by the day we always talk about, June 8th, it had topped out at 8.5. Then it sold off again. And then it rallied hard. Looks like maybe earnings around late July, July 30th, actually July 31st. It shot up from $8.61 to $13.48 by the next session. So a big pop there. So obviously maybe the earnings were looking good, but that was also pretty much the high for the year. It was like intraday, it got as high as 17.25. So it had a nice run there. And then it pretty much never looked back. It just trended right back down again. And by November, it was trading $6.50. I'm not sure what drove it up that moment, probably earnings, but we never know. I'll have to go dig in for sure. Then it could not sustain those levels. It got cut pretty much down to about a third of that. And then slowly has been rallying from there again back up to where it is right now, 874. So an interesting year out here in ADT. Let's see what our Eye of Sauron found out here. Big print, one of the larger prints we saw today in single names out here. 18,927 of the Feb 10 puts going up for $2.05. Interesting print, kind of right mid-market there. This market was $1.60 at 220. That's pretty wide, but it's ADT obviously too, so not exactly the most liquid of names. The stock was right around $9 when they put this up, so a little bit higher, $8.98 when this trade went up. So 205 seems like might be a little bit of put love. We'll have to parse it a little bit more to know. There are earnings, but not in this cycle. The next earnings announcement is March 4th. So now they're not paying for earnings juice out here. Worth noting also, Mr. Meatball, that there was a flurry of some other activity going up out here as well today to the tune of the Jan. Interesting strikes out here. Obviously was maybe a little bit of a corporate action out here because there's also the Jan 9.3 calls we're trading today for a pretty decent size. They both actually line up total about 20,400 for the Feb 10 puts and about 20,000 and a little bit extra for the Jan 9.3 calls. The Jan calls, though, went up in a flurry of much smaller lots. There wasn't like a 20,000 lot print. So that's what kind of makes it interesting. The similar size, one big print for the Feb puts, and then the Jan call is kind of trading around the same time, but for a lot smaller paper. Those seem to be biased towards the offer as well. So, Mr. Meatball, we could have unrelated paper. It doesn't seem like it. It's pretty sizable. Or we could have some sizable time strangle love here in ADT. What are your thoughts, first off, on this massive put palooza, and then B, also the potential specter of the same amount of calls going up a month earlier and a strike or so lower?
Yeah, that's a weird one. Maybe it's some sort of stupid. It could be two entirely separate approaches. This is a little odd because one went up in blocks and the other one went up in individual trades. So it makes you think it's more likely two separate customers. One that's probably buying puts and maybe buying stock at the same time, and then maybe people seeing all the stock buying. They hop on the calls. That wouldn't surprise me, especially given the price of the underlying. It actually kind of makes sense to me in that respect.
Well, the cheapy underlying. Is this a name that your Little John folks love? Did like a little ADT there, Mr. Meatball?
No, this is not one that's hit our radar because it's mostly trades in larger blocks. So it has not popped onto our little radar yet.
You wait, we're talking about it now. So that means the Little John hordes are coming for it.
I know. Maybe you're ahead of the curve. Totally could be.
Pretty soon, anything under the $10 range, they have their eye on. We're going to keep an eye on this one too. It's kind of a funky one, listeners. We'll come back to this one. Obviously, it's not that far out. So even though it seems like January should be far away, it's not. It's in February. So we'll know probably pretty soon, next couple of weeks, what's up with these calls and these puts, because the size is weird, so it does seem like one probably maybe inspired the other. Maybe a customer saw the big print going up and say, hey, I like ADT as well. Maybe I want to take a different direction, but the smaller lots going up throughout the day, obviously a very different approach at the very least. And worth noting, we'll keep an eye on that as we keep on rolling into our next name, our next victim here for the Eye of Sauron. This is another one we haven't talked about in quite some time. This is El Dorado Gold Corp. Ticker symbol EGO, E-G-O. That's an interesting ticker out there. Trading right now $13.18, so a little bit richer than our last name, but still certainly within the Robin Hood Little John wheelhouse out there. A year ago, this name was trading $7, 7 and change. And then it's been an interesting year out here as well. Topped out at nearly $11 on February 25th. Then we all know what happened. Sold off pretty hard down to about $4.60. And then it rebounded fairly quickly by about exactly a month later, April 24th. It was trading $9.74 again, so it had pretty much regained almost all of its pre-March Madness losses. And then it sold off again back down to about $8 right around that level. And then it turned right around again and rallied all the way up to $12.71 on August 5th. A lot of that probably coinciding with the massive march towards 2000 that we saw out there. in gold land, but then it kind of gave it up again, kind of selling off down to about 975 in September, then rallying yet again up to about 14.15. Looks like it topped out right about that level at about 14.5 in late October, early November, and then kind of giving all that up again to about 1180 recently, and this in the last week or so, rallying again from 1180 up to where it is right now, 1320. So a nice $1.40 or so out there in terms of rally. So decent couple of weeks out here in Ego, but a tumultuous year. Let's see what our Eye of Sauron found out here. Another pretty sizable print. This one going another, again, also similar time frame, January as well. The Jan 16 calls going up for a quarter, so lifting the offer 12,480 times. Now, if you're saying to yourself, Self, that's a lot. That ain't all of it. There's a heck of a lot more following after that, to the tune of over 40,000 had hit the tape as of the start of the show. Maybe more have even printed by now. So you got 40,492 of these Jan 16s going up. Pretty much all of them lifting the offer, or pretty close to it here throughout the day. And there's no, unlike the other name, no other prints around it that seem equally sizable or any sort of layoff paper. It's pretty much straight up call PALOOZA, gobbling up the Jan 16s. If that's the case, if someone is, and these are clearly opening as well, we need a bit of a pop here. This bad boy, this bad boy needs to run a bit for these Jan 16 calls to make some hay, because this guy didn't buy a lot of time. He didn't buy to DISA next year. He bought Jan. So he needs a pop in Ego, and he needs it now. Mr. Meatball, is that your takeaway as well? Someone just slinging some size here in Eldorado Gold Corp to the upside.
Yeah, this one hit our tape early. We saw it went up in two relatively big prints. And then, this appears to be a play on, maybe a stimulus deal, bringing some inflation. The fact that Treasury auction went kind of poorly. Maybe we get a softer dollar, which rallies gold. The miners have been pretty hot lately. They're doing a lot better than they had been doing. And so it's definitely makes a lot of sense to me. I've seen a lot of paper in names like GLD, in some of the other miners in the minor ETFs. So this is in line with a lot of the way we've seen relatively large traders position in miners and junior miners for gold.
We head on into our final name. Uncle, or I should say Mr. Rock Lobster, is always asking us to review interesting trades that we've talked about here. Let me always put them in our to-be-watched category to come back. We're going to do just that right now, listeners. Dialing back our Wayback Machine, not that far, back to October 22nd, where we profiled at the time Union Pacific, what looked like line in the sand puts, ticker symbol UNP. At the time, I recall the Rock Lobster, he referred to this as what he termed a wimpy trade. He didn't like it. So let's see how this one fared. At the time, we saw a pretty even block of 10,000 of the NOV 175 puts going up for $2.31. This was actually below the bid. The stock at the bid was actually $2.33 at the time. The stock was at $189.5. So an interesting print. And they had earnings. Looks like that was a post-earnings trade, because they had earnings that morning before the bell. So maybe someone deciding to come in and say, hey, these were fairly out-of-the-money puts, trying to maybe take what was left of the earnings juice and just annihilate it. Either way, it looks like, at first blush, this trade worked out pretty well. These were no puts, so they went out not that long after our show on November 20th, about exactly a month later. And the stock looks like it cooperated pretty nicely with this. It closed at 203 on expiration day, so if he had held it all that time, it would have worked out, but he didn't have to. He actually came back in and took them off when they had already moved pretty substantially in his favor. He took them off pretty much all 10,000 on November 10th for around 14 cents. He did that when the stock was about 201 and change, which, again, we can get behind here on the show. The guys sold them for 231. You got pretty much about a dime left. Why sit there and keep all that risk on for a dime? We always say, hey, would you reopen it? Would you retrade this? Would you sell them again for 14 cents? The answer is probably no. And it sounds like this guy definitely was, because he bought them all back that day and closed it out, which, if you do the math there, that's about $2 million in his pocket. So even though the Rock Lobster didn't like it, he thought it was wimpy. It still worked out for this folk to the tune of these guys to the tune of Oh, $2 million. Mr. Meatball, is that your takeaway as well? Our friend laughing all the way to the bank?
Yeah, it seems like he's a happy camper, doesn't it? He made his money, tried to take advantage of the fact that, yeah, vol was still elevated, even post-earnings. Back then, we still had some, the VIX was 4 or 5 points higher, so he's seen multiple benefits of both overall market volatility and UNP vol dropping. Plus, the stock the stock got a nice rally, over the last month or so. So, and again, this guy is a perfect example of the ABC approach. Always be closing your big winners. So hats off to our wimpy friend for a great close.
Yes, indeed. Hey, do something. It works in your favor. We always say it. Do something. Take off your hedges if they work. Close out your shorts if they go dramatically. This guy made over $2 on this. You could take them off. You don't need to wait for the last 14 cents to go away. Speaking of waiting for things, we waited for him. Now he's finally back. Uncle Mike getting all of his connection issues sorted out. Before we get into listener questions, I'm curious, Mr. Uncle Mike, you're kind of our resident metals guy here on the show, as apparently they're doing construction in our building. So if you hear that, listeners, I apologize. But yeah, it looks like Mr. Uncle Mike, someone liking themselves some very, very near-term upside paper in this EGO, this Eldorado Miners name, going out in January. Upside calls printing over 40,000 times for 25 cents. The Meatball speculating maybe a little bit of near-term stimulus play. A, what are your thoughts on this play? Do you like it? And B, do you concur with the Meatball's analysis, sir?
I concur from the standpoint that, I agree that stimulus can be a big factor in what's happening at this stage. And let's be honest with ourselves. If we continue to print more money, I don't really see how gold and silver can't go up, quite frankly. But I've been saying that on this show for 1,000 episodes or so. So that's kind of my take on that. But I think it's a near-term play. And I think just the initial surge, if people do rush to the gold, it could definitely have have a nice profit on it. The thing about the miners, though, for short term, you can really benefit more or lose more to the short term. What I mean by that is that a lot of times miners can move more than the underlying commodity itself. So if you're buying a gold miner company, a lot of times you can get more movement than you would in gold itself. Now, over the long term, I'm typically not a fan of doing that, but over the short term, if you're looking to speculate, definitely an interesting thought if you are in the speculative realm in the metals.
Yeah, we'll keep an eye on this one and come back to it because it's only 25 cents. It's only Jan, so it's not going away in the long term. So we'll come back to this one, see how our friend fares. Now it's time to come back to you folks, see what you have on your brains. It is Thursday. It is time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where you guys take the reins. Your questions, your comments, your insights, your pearls of wisdom. Let's kick it off here. These are trying times. Always nice to kick it off with a little bit of love. This comes from Julian Mittman. He says, "Hi, Mark. Just found your radio network and cannot seem to get enough. Filled with wisdom, wit, and educational wealth. Studying options and learning how to use them for investing has become a pleasant and interesting journey for me. Keep up the spirit and continue to deliver the best options content." Well, I sincerely, and all of our hosts sincerely appreciate that. Julian, you're kind of emblematic of a wave, a tsunami of new listeners who have discovered, A, the options market, and B, as a result, our network over the course of this past year. And obviously, we've been doing this for a long time. We created the first options podcast way in the dark days of Jan of 2007, but actually some of the earlier ones are even before that. So before there was an iPhone, there was our network, or at least one show at the time. But we love to see all the new people who are discovering options, discovering things like volatility or futures options, whatever your flavor of options is that you like. Chances are we got something for you. We're glad you appreciate it, and we got to see so many new people are out there discovering the network. So thank you very much for your kind words, Julie, and everyone else who's taken the time to do that sort of thing on your Apple Podcasts or YouTubes or Google Podcasts, wherever you get the show, including a lot of you like to do it on the app stores where you get our apps, which I do believe, I think our Android app was briefly out of the store for a little bit. It should be back. If you're having problems finding the Android version of the app, let us know. It should all be back. You have to sometimes update permissions on things and it slows things down. So hopefully it should all be there if you can't find it in the Android store. Hit us up let us know. All right, next up, well, this comes from what we were talking about earlier, Mr. Meatball. Some folks listening live to the show, we were talking about, or you were talking about, we got the potential to blow through 3,700 if we get that stimulus agreements, and if that happens, probably going to see a collapse in VIX along with related products like VXX and UVXY. And a lot of people chiming in on that. Mr. Seeds said, I see it as priced in and the news will get sold. So he's saying he's not seeing it as a rally. He sees it the other way. And this other guy, BC, these handles are great. BC3 22032. That's a good one. He says, I agree. Even with any stimulus, SPY is heading south hard. UVXY is a clear winner from here. And Mr. Seeds also chiming in saying, good news, market down. Bad news, market up. I'm not going to buck the trend until the end. So what do you think, Mr. Meatball? Some folks thinking maybe this is being a little bit contrarian, think we'll actually head down on stimulus news, sir.
I think if that was considered kind of a done deal, I would agree with you. But, these people are clearly wrong. So, don't let if your outlook is your position, then I think I know how these two gentlemen or ladies are positioned. And you're both wrong.
That's why we like you. Always mincing your words, sir. But yeah, clearly I think those probably came through from people listening on StockTwits. So they like to talk their books over there on StockTwits land. But hey, we appreciate all of you out there. Keep listening and loving, even if we don't agree with you all the time. That's what makes a market, right? All right, next up we got, I like this handle. This one, at least is an intelligible handle. iPhone Boy wants to know, when a stock has an IPO like AIRBNB today, how long until the options are available to trade? That's an interesting question, Mr. iPhone Boy. This used to be a pretty standardized phenomenon. It takes a little while once the stock is listed for the exchange to go through the approval process. They have to make sure it's optionable and meets all their criteria. It used to be, the fastest you would see this was about 2 weeks. So after the stock was listed, about 2 weeks later, you'd see the options come along. If it was a hot name, they had to fast track it to get it, to 2 weeks. Otherwise, it could take much more. But these days, the exchanges are obviously very greedy for your volume. They're all pretty much for-profit public entities now, so they need every tick of volume. So if they see a hot name they think will trade volume, they will fast-track it. And we have seen some of these names coming out as few as like 5 days from when the IPO happens. So there's good news for you, iPhone Boy, and everyone else who wants to trade, whatever the hot name is. Could be Airbnb with Snowflake earlier, some of these other ones. You want these hot names in your hot little hands as soon as you possibly can. I would not be surprised to see someone like the SEBO or others list these within a week. So keep an eye out there for Airbnb. I looked just now as the question came in. I did a quick glance. I haven't seen any circulars yet from the exchange that they're going to fast track it, but certainly, it seems like it's a popular one, so if that's the case, I wouldn't be surprised to see it within that 2-week window over here. So stay tuned for that one there. iPhone Boy, I like that. All right, Mr. Uncle Mike, another one for you here. This comes from Nicholas. Uncle Mike says, that's right, he even names you in the question, so I won't even talk. He says, is Uncle Mike putting new clients into SPY at these all-time highs? If not, what are the alternatives that he's looking for, or looking at, I should say, for typical clients? Mr. Uncle Mike, I'm a typical client. I guess that means maybe I'm a guy like 55. I got $250,000, $500,000 in my retirement, and I want to look at getting my 60, 40, 70, 30 exposure. What are you doing for a guy like that these days?
Well, what I would do right now would be something along the lines of, I would just say wait till January. And the reason is that I've made this mistake in the past, in that my style of trading is that I like to use the open of the year, which I've said on the show a million times, as kind of my benchmark of when I get people in, or when I go to cash. So in other words, like during COVID, when the market was below that amount, we were down very minimal. And so as we gain money, if the market goes up higher on the year, what I try and do is I become a little bit more aggressive. And so some years when I've gotten people into strategies, what's happened is that it's benefited and it's worked out. But because I'm a little bit more aggressive when I'm playing on, for lack of a better term, house money for that year, then I'm more aggressive. And then sometimes it's worked out, sometimes it hasn't. But I try and be pretty upfront with my clients to where if they're coming in when I'm up a lot on the year, I'm probably going to be a little bit more aggressive with them. But if they're, and we would allocate accordingly. But if they're coming in when the market's flat on the year and I'm flat or whatever the case may be, then I would take them at any time just because of the fact that I have my my stop loss, my mental stop loss in place. So right now, I would probably just say to keep it simple, let's just wait till January. But for typically throughout the year, it just depends on every person. Now, in terms of am I comfortable with going into SPY at all-time highs right now? Good gosh, yes, love it. Buy me the SPY.
There you go. He loves it. Buy him the SPY, he says. Oh, jeez. We got more people. Leave it to the meatball to pry people out of the woodwork. This guy talking about your comments from earlier, Mark. A true inventor. He says a civil war trumps all stimulus packages. America divided, we stand. The economy's on the verge of popping at the slightest resistance. Blah blah blah. America will divide and markets will implode. Well, there we go. That's an uplifting thought. Thanks to our producer for sharing that one. Let's move on from that one quickly. Let's go out here to, this is the name here, Bakhtiar Izzet. He wants to know a question a lot of you have these days, looking at some of the hot names out there. It's like, what do you think about NIO call options? Are they good? Thank you. Are they good? That's an interesting subjective term to put out there, Bakhtiar. My short answer is no, I don't like these. I know a lot of the Robinhood and other folks are piling into these bad boys. We've talked about it topping our most actives multiple times, and it's usually in the top 5, if not in the top 3. Today was actually a comparatively quiet day. It was only at, number 4 today with 312,000 contracts. We've seen it top Apple and Tesla some days in terms of volume. That's no mean feat. So people are clearly trading this thing up. What concerns me is that it's a lot of this kind of newer flow that we're talking about that aren't as well versed in the options fundamentals that we talk about here on a show like this all the time. I'm looking at the top flow right now for NIO, and it's at almost $45. It's $44.92 right now, up about $1 or 2%. So another green day for NIO out here. And we have calls going out tomorrow, December 11th. So they have a day to go, listeners, that are out of the money still. These were, when the stock went up, there was 44.5. These 45 calls expiring tomorrow are still trading for over $1. That's 140 vol with a day to go. And it just keeps going out here the whole way down. The Dees double calls, 55 calls. When the stock was below 44, 43.85, they go out in about a week and change. There's trading for at 130 vol with a 48 cents. These are absurdly expensive. So many folks are coming out there with their 1 lots and their 3 lot and just buying these without paying any attention to what the vol is, what your break even needs to be on these things. So from that perspective, no, I don't like that. And it's not my favorite approach. That said, would I rather see you maybe take a limited risk trade and put a little bit of capital to work and maybe an overpriced call, or maybe preferably better like a vertical or something, get a little bit of sales action versus spending a lot of money to buy the stock outright and then be able to ride it back down if it does indeed retrace? Yeah, I definitely prefer that because that's a much more risk limited type trade than just gobbling up the stock. But yeah, these things are super juicy, I think is a technical term, and something you need to trade with caution if you're out there amongst the many masses who are just gobbling these things up. Mr. Meatball, I don't have to even probably ask. I'm sure NIO calls are dominating your Robinhood tape over there, or I should say your Little John tape from the Robinhood people. So what are your thoughts here as Bakhtiar wants to know? Do you think NIO calls are good, sir?
Well, I mean, so you're right. The vol is excessively high, but this thing will move $2-3 at a clip for no reason. So, the vol's high for a reason. And interestingly, the vol's actually way down. It was over 200 about 10 days ago. And, to Mark's point, if you're a more sophisticated investor or even a slightly sophisticated investor and you're bullish, call spreads make a lot more sense than flat out long calls. In addition, this is one where you're like, hey, I love Chinese solar. You could talk me to a put sell. But one of the ways you can tell if a stock is a really hot Robinhood stock is when what we call skew is inverted. Skew is the relationship of out-of-the-money puts and out-of-the-money calls to the at-the-money options. So a normal stock has puts that have a higher implied volatility than calls because naturally the long stockholders want to hedge and they use puts, and then a lot of times they'll collar it by selling calls. So that creates a curvature. Now, NIO and the typically super hot Robinhood stocks will have an inverted skew, which means the higher you go in the call strike, the higher the implied volatility. This is extremely favorable for call spreads. So, NIO, do I like calls? Yes. Do I like call spreads? I love them. Or better yet, and I don't want to go a bridge too far, but call butterflies.
Oh, now you're blowing people's minds. Yes, you got to have some sort of short leg along with it, because if this skew, as you mentioned, is so bid up, if you're just straight up outright buying out of the money calls or near at the money calls, you're giving yourself a very difficult hill to climb. But you have some sort of other short leg against it. Now you got something that's working in your favor, so you're taking advantage of some of that overpriced juice. 'Cause as Mark mentioned, they bid it all up for you. They made these verticals much more attractive than they normally would be. So take advantage of that. If you're going to do that, rather than just gobbling up the stock or just buying calls outright, I'd much rather see you do some verticals or some other judicious, or as Mark even mentioned, if you're a little bit more savvy, the flies, the old 1x2x1 out there. We got to keep on rolling, though. Great questions. Now we got to get around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until, for this show, we can gather here together again on Monday or perhaps tomorrow on Volatility Views there again, or later today. You'll hear it on TWIFO, even though, spoiler alert, we recorded it yesterday. Don't tell anybody. All right, let's go first to the Uncle list of Mikes. Mr. Uncle Mike, sir, what are you watching for the rest of this week until we can gather here together on Monday?
I mean, 3,700 is my mark and my number. I'm watching the news on the stimulus, like what Mark talked about, to kind of piggyback on what he said. And I'm also of the school of thought to where right now it looks like things it's not going to happen on the stimulus. So if they do somehow pull off a miracle like Congress often does, then trying to make themselves look really cool at the last minute, the 11th hour, then I think we could definitely see a rally on Christmas on Christmas rally that week. But if not, then I don't think it's going to be dire, horrible, awful, and bad. But I could definitely see a pullback coming if it doesn't happen. The other thing, of course, watching to see the COVID information to see if that's a big news event or not. I don't think it's going to be right away. But if for some reason it is not approved, then I think it could be. So that's what I'm watching.
And Mr. Meatball, same question for you. In addition to all things NIO calls, what is on your radar? And also, you have to share with us your Robinhood single name one that's come on your radar. You teased it at the top of the show, sir.
All right. So I'm watching, 9-part stimulus, 1 part vaccine. I'm a little more bullish on a stimulus deal than Mike is. But, I think that if you're the way he was speaking, I think shows the fact that there is some real upside if they get a deal done. I'm not so sure that it's totally expected. And the stock I'm watching is Genesis Brands, GNUS, GNUS. And it is a $1.60 stock, and it has seen a giant pop in option trading. This is one we did put out to our Little John traders. And we just noticed that there is a huge amount of speculation. They're speaking at a conference. They just signed a deal with Shaq. They have a Warren Buffett show. So it's one that is about $1.60. The last one of these that jumped on our radar was FCEL, and it went from about $1.80 to $9. So, this is one that we think is very interesting.
GNUs, that ticker sounds familiar. I do believe we've talked about that one before. So that's a fun one. So if you guys are interested in that, I like saying GNUs. Gary, it reminds me of the old show, The Great Space Coaster. All the news is good GNUs with Gary GNU. All right, everybody. We've got to wrap it up, though. This music means that we are done. But before we do, let's go back around the horn. Let's check in with everybody, see what they have working on that maybe interest you. Mr. Uncle Mike, if I want, for example, listeners have questions, what should they do in SPY right now? If they have said questions, they want to reach out to you, pick your brain, where should they go? What should they do?
Go to my website, stcharleswealth.com.
Oh, no, looks like his tech issues have reared their ugly head again. Mid-sentence, what he wanted to say was stcharleswealth.com is the place to go, listeners, to get your fix on all things Uncle Mike. What should we do with SPY, Santa Claus rally, stimulus, hedging, rolling puts, all these things and a lot more. stcharleswealth.com is the place to go. And Mr. Meatball, if I'm intrigued by all things Little John, I want to check out GNUs or FCell. You're right, that FCell one really took off. Where should I go? What should I do, sir?
Yeah, tonight I am doing a webinar with a bond trader where we're discussing kind of what the year ahead with the Fed looks like and how it could affect, speaking of Eldorado Gold, how it could affect gold, bonds, and the stock market. I put a tweet out saying, where you can register. But, tonight, 8 Eastern time. And as always, join our email list, and you'll get all the kinds of amazing information and great trades on a daily basis.
There you go. Check them out. Optionpit.com for the webinars like tonight. And, of course, check out the Little John for all the news that's good to news with the Gary GNU over there, GNU. That's always a fun ticker. Speaking of fun, you guys are lucky. You got it coming at you immediately after the show. Usually you have to wait. If you're listening live, you got to come back in half an hour for all the goodness of TWIFO. This week, a little bit different. We beamed in the head of research over there at CME from across the pond, so his schedule is a little wonky, so we had to do it a day earlier. So if you listen live, you got to hear it yesterday, but now you're going to hear it live to tape immediately for you. If you like all things volatility across the broad spectrum, let's say rates or ags or metals or energy or equities and a lot more, we're going to break it all down right after the show. Of course, the show also brought to you by our friends over there in the land of demand derivatives. I'm not allowed to say when their crowdfunding campaign ends, but it does have a finite date on it. I know a lot of you guys have already checked it out for yourselves. Check it out if you're interested. Demandderivatives.com/crowdfunding is a place to go to learn more. Low minimums. You can kick the tires. Check it out for yourself. It's an interesting, we like to bring you unique opportunities here on the network. And to my mind, no one's ever crowdfunded an exchange before. So check it out. Demandderivatives.com to learn more. On behalf of the greasiest of meatballs and the unklest of Mikes and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in those questions. Keep them coming. We'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views, and then right back again on Monday for another episode of The Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.